Our next topic for revision is employment, a very important topic. So first we need to distinguish between the employment and the self-employment. Employment is said to be a contract of service, while the self-employment is said to be contract for services. There are other factors which lead to the presumption of employment rather than self-employment. Equipment. The individual will not use his own equipment, the employer will provide equipment. Basis of payment. The individual is committed to work for a specified number of hours. Financial risk. The benefit and loss of good or bad management is of employer. Regular remuneration. Remuneration should be provided to employee on regular basis. Control. The employer controls the manner and the method of work. Obligation of work. It is the obligation for the employer to provide work and obligation for the employee to do that work and hold integral position. The work performed by individual is an integral part of employer's business, not an accessory to it. Now, what is meant by the employment income? Employment income includes salary, bonuses, commission, and benefits, which we need to consider in detail. Less allowable deduction, and it gives you employment income. When are earning received? For the normal employee, it is said to be date of receipt or date of entitlement, whichever is earlier. But for the director, the date should be the date of receipt, date of entitlement, date when amount is credited in company's accounting record, and the remuneration, if determined by the end of the period of account, then the period of account date, closing date of the period of account, and if the remuneration is determined after the period end, the date when the amount is determined. Remember, receipt basis does not apply to pension income. Now it is about allowable deductions. First allowable deduction is said to be contribution by individual to occupational pension scheme. Second, fee and subscription to professional bodies. Third, traveling expenses incurred in performance of duties. Fourth, donation to charity under payroll deduction scheme. Fifth, capital allowances on plant and machinery provided by an employee. Remember, this is important, that capital allowances on plant and machinery provided by an employee. Now about traveling expenses which are allowed as deduction. Traveling expenses between home to permanent workplace are not deductible. Now, what is meant by permanent workplace? A workplace is permanent if an employee spends at least 40% of working time at the workplace and the period exceeds 24 months. Now it is about the statutory approved mileage allowance. Mileage allowance is paid by employer to employee if the employee uses his own vehicle. Amount up to the approved mileage allowance is exempt. Excess is taxable and less is allowable deduction. It means that if an employee is entitled to receive, let's say for example 5,000, and he actually received 5,000, the whole amount is exempt. But if an employee is entitled to receive 5,000 and he received 5,500, the excess 500 will be taxable. And again, if the employee is entitled to receive 5,000 while his or her employer gave him 4,000, the less 1,000 amount received by him is said to be allowable deduction. So for the car and vans, first 10,000 miles entitle him to an allowance of 0.45 pound per mile or 45 penny per mile, and for above 10,000 miles 0.25 pound or 25 penny per mile. Now about taxable benefit, the general rule is the cost of providing benefit is taxable. Means whatever cost incurred by the employer for providing such service will be taxable benefit for the employee. Like in this question, point 3, during the period 6 April to 30th June 21, patient's granddaughter was provided with a free place at the private school run by the patient's employer. The normal fee payable would have been 4600. The additional marginal expenses of providing the place for the grandchild was 540. So here the cost that is incurred by employer for providing such service is 540. So only 540 would be recorded as the taxable benefit, not 4600 the normal fee. So you can see the only marginal cost to employer would be included in the taxable income of the employee. Further, the benefit should always be time apportioned. Like if benefit is provided for the part of the year, then the benefit should be time apportioned. For example, accommodation is provided for the part of the year, then the annual benefit should be time apportioned, or the car is provided to employee and the car is provided for the part of the year, and again the benefit should be time apportioned and then recorded. And whatever is the employee's contribution to gain that benefit will reduce the cost of benefit. Exception is about the provision of private fuel. Accommodation benefit. Accommodation benefit could be said to be job related accommodation or job not related accommodation. Job related accommodation is provided for security reason, or it is necessary for the proper performance of duties, or customary and ensure better performance of duties. Now expenses connected with the living accommodation like heating, lighting or any furniture provided by the employer. In that case, if the accommodation is job related accommodation, then we don't have to consider the actual amount expended by the employer. Only the taxable benefit would be 10% of net earning. Only the taxable benefit would be 10% of net earning. And what is meant by net earning? It is said to be employment income. Job not related accommodation. In this case, if the accommodation is job not related, the basic charge is said to be the higher of annual rental value or rent paid by the employer. There could be some additional charge if the value of accommodation is greater than £75,000. In that case, annual charge would be cost less 75,000 multiplied by 2%. Here cost means cost of purchase plus any improvement to the property made before the start of the tax year for which the benefit is being calculated. And if the property is made available to employee more than 6 years after the employer has purchased it, use market value instead of cost. And also any contribution made by the employee can be deducted in arriving at the taxable benefit. Accommodation, living expenses. Expenses that are connected with living accommodations are taxable on the employee if they are paid by the employer. Like salary of a watchman, cook, gardener, if paid by the employer is taxable for the employee, or the utility bills paid by the employer is said to be additional benefit for the employee and are fully taxable. Vouchers, all kind of vouchers like cash voucher, goods voucher, lunch voucher provided to employee are taxable on the cost to employer. Means whatever cost has been incurred by employer for providing such benefit will be taxable for the employee. Private use of employer's asset. If the employer provide asset to employee for private use, this gives rise to a taxable benefit. and taxable benefit of the employee will be higher of 20% of value when first made available to employee or a rental paid by employer. Whichever is higher is said to be the taxable benefit for the employee. And if the asset is provided for only part of the year, the 20% charge is time apportioned and also the benefit is reduced by any contribution made by the employee. Now question is, how would be the assessment of taxable income if the asset is subsequently given to the employee? Then in that case, the taxable benefit would be higher of market value when given, and market value when first used, less amount taxed as taxable benefit up to the date of gift, and whichever is higher would be reduced by the price paid by the employee. An example in this case is test your understanding in the Kaplan book. A suit costing £300 was purchased for Habiba's use by her employer on 6 April 2020, and on 6 August 2021 the suit was purchased by Habiba for £14 when the market value was £30. Calculate the benefit assessable on Habiba for each of the tax year affected by the information above. So first we have to consider the market value when given, and market value when given this suit to Habiba was £30. So £30 is the market value when the suit was given to Habiba. The second rule we have to consider market value when first used, less amount tax as taxable benefit up to the date of gift. So the market value of gift when first given to Habiba was 300, and Habiba has already used that suit for a period of from 6 April 2020 to 6 August 2021. So this is the period of 16 months. Means 16 months period's benefit would already be included in Habiba's taxable income, and it will be calculated by multiplying 300 with 20% and then by the time proportion 16 by 12. So it is 80. Second thing we have to consider is so these two values we have to consider either 220 or 30, whichever higher. So 220 would be higher, and then we need to deduct this by the $14 paid by Habiba to get that benefit. So the remaining value would be 206. But remember, in this question this is not your answer, because in the current year the 4 months benefit will also be included in that. Means we are assessing for the period of 21-22, and in this period the suit was used by Habiba for the first 4 months, April, May, June, July. So the 4-month benefit would also be included, and total benefit would be 206 plus 300 into 20% into 4 by 12. So it would be 20, I think. So the total benefit that will be included in the Habiba's income would be 226. So we just confirm that how to rule should be applied. Next is furniture and accommodation provided by an employer is also taxed in this way. Mobile phone are exempt, but up to one mobile phone. Additional phone are taxed at the rate of 20% of the cost plus running costs paid by employer. Bicycle provided for the journey to work as well as being available for private use are exempt. Company cars. If a company car are provided for private use except pool car, then employees are taxed. And the taxable amount would be, or annual benefit would be, adjusted list price of the car multiplied by CO2 emission percentage. Now, how to calculate the adjusted list price? It is said to be the market price ignoring bulk discount plus cost to employer for additional accessories less capital contribution by the employee, but up to £5,000. It would be time apportioned and employee's contribution for the private use of car would reduce that benefit. If more than one car is provided, then separate taxable benefit will be calculated for each car in the same way. Remember, no extra benefit will arise for the cost of insurance, repair, maintenance and running costs. And if additional separate benefit is provided to the employee, like driver, then the cost that would be included as taxable benefit for the employee would be the cost sustained by the employer. Car fuel for private motoring. If fuel is provided to user of company car, taxable benefit would be 24,600 multiplied by appropriate percentage. And this appropriate percentage is based on CO2 emission of car. Remember that there is no reduction in the taxable benefit for the partial refund made for private use of fuel by the employee. The charge is only cancelled if the full refund is made by the employee. Now about company vans, there is a standard benefit of £3,500 a year for employees with private use of company van. And if the private fuel is also provided with company car, there is an additional charge of £669. Pool cars. Car is considered pool car if all the following conditions are satisfied. It is used by more than one employee. Any private use is incidental. It is not normally kept overnight at or near the residence of an employee. Electric powered motor car. One percentage applied to electric power motor car with zero CO2 emission. For hybrid electric motor car with CO2 emission between 1 to 50 grams per kilometer, the electric range of a motor car is relevant. The electric range is given to you. If it is 130 miles or more, then the percentage benefit would be 1% and so on. Now it is about beneficial loan. A beneficial loan is one made to an employee below the official rate of interest of 2%, which means employer has to charge 2% interest if he provided loan to the employee, and if he provided loan to employee on concessional rate or interest free loan, some benefit will be assessed and included in the taxable benefit of employee. The taxable benefit: interest expense as per HMRC means as per 2% less interest paid. Now how to calculate the interest expense as per HMRC? Interest as per HMRC is lower of calculated as per average method or precise method. In average method, the loan outstanding at the start of the year is summed up with the loan outstanding at the end of the year divided by 2 multiplied by 2%. While in precise method, the balance of loan outstanding in months multiplied by the time period for which the loan is used divided by 12 and multiplied by the 2%. Important point to note that is, if the amount of loan is up to 10,000, means if it is 10,000 or less, then the taxable benefit is exempt. Other taxable benefit, the general rule is the generally taxable amount is cost to the employer for providing benefit. Reimbursement by employer of expenses is a taxable benefit for the employee, but the employee may be able to claim a deduction if the expense is incurred wholly, exclusively and necessarily for the job. Now the detail of exempt benefits. Free or subsidized meals at on-site canteen or restaurant if available to all employees. Christmas parties, annual dinner dances, etc. for staff are exempt if employer incurs up to £150 per annum per head. Provision of parking space at or near the place of work, including reimbursement of cost of such parking place. Home workers' additional household expenses of up to £6 per week can be paid tax-free without any evidence. Reimbursement of expenses by employer when employees away from home, £5 per night in UK and £10 night if overseas. Remember that if exceeds, the whole amount is taxable. Relocation and removal expenses are exempt up to 8,000, excess is taxable. Gift received by a reason of his employment from a genuine third party, provided the cost from any one source doesn't exceed £250 in a tax year. Payment to approved child carrier is exempt up to £55 for basic, £28 for higher, and £25 for additional rate taxpayer. Workplace childcare, sports or recreation facilities are exempt. The provision of one mobile phone exempt. Employer's contribution to approved pension scheme exempt any scheme. Entertainment to employee by reason of his employment by a third party like a ticket at a sporting or cultural event exempt. Long service awards in kind like a gold watches are exempt up to £50 for each year of service of 20 years or more. Work buses, subsidized public bus service and the provision of bicycles and cycling safety equipment exempt. Travel benefit which doesn't cost more than £50 per employee provided these benefits are not cash or cash voucher exempt. The provision of security asset or security services by reason of employment exempt. Welfare counseling services if available to all employees exempt. Premium paid by employer for employees' permanent health insurance. Pension advice of up to £150 per employee per tax year is exempt if available to all employees. Awards for up to £25 under staff suggestion scheme which is available to all employees for suggestion outside their duties. The cost of work related training course and some beneficial loans.